Hey guys, AKIL'S here. Welcome back to another Trading Edge video. I've got a really cool session in store for you today. Of course, I'm going to bring you a trading opportunity that is on my radar, but we're also going to combine it with a really good lesson talking about, and that powerful tool is going to be called. Now, before we hop in, if you're new to the channel, make sure you subscribe. There's lots of content uploaded on a weekly basis. We got the Trading Edge videos. We've got random videos that are released during the week. And of course, we have the enormous short sections of kind of quick tip trading videos. So I highly recommend that you make it part of your daily routine to watch a few, get fired up, get inspired, get motivated, then head to the charts and do what you have to do. Now, before we hop in, I apologize for last week's video. I know you guys tune in looking for trading opportunities, but I decided not to do that last week because, well, I knew what was going to happen as far as the big gaps in the market. So there was really no point in giving you a trading opportunity that I wasn't comfortable with because I knew that the markets would go crazy on the open. If you haven't seen the gaps, or if you're wondering and confused about what they are and why they happened, make sure you check out the recent video I put up describing what gaps are, why they form, breaking a few myths about them, and most importantly, telling you how you can put yourself in the safest position possible so that you're not caught on the wrong side of them. So we're going to start off today on the DAX. And for you guys that are unfamiliar, this is not a Forex pair, which I know we usually talk about on this channel. This is going to be an index. Now, this also showcases the beauty of technical analysis, because if you understand technical analysis, if you become an expert chartist, this is a skill that you can use in really any type of market. You can use it in the stock market, you can use it in the Forex market, you can use it in crypto, whatever else you want to use it in. The ability to read a chart is an amazing skill that will make you very versatile as a trader and an investor. So today we're looking at the DAX because this is going to offer an excellent trading opportunity, but also an excellent lesson on a topic that we ended the week in my live room discussing, which was divergences. Now, real quick, if you're unfamiliar with what this is, the German 40 or the DAX, this is pretty much the German version of the S&P, or the S&P is the American version of the DAX, which basically means it's a bundle of blue chip stocks all put together in a nice little decorated box for you to trade and or invest in. And in many cases, it's a very directional type of index, like most of them, not all, but most of them. So we're going to talk about a potential buying opportunity here in the DAX, but I want to blend this lesson in there first. And that lesson is going to be on divergence. Now, divergence is, in my opinion, an extremely powerful tool in the market that you can use to kind of, I don't want to say ID, because nothing in its own works great. It's all about kind of putting different clues together and building a case for entry. But it's an excellent clue that you can use to spot reversals. And when you add that clue to other aspects like directional bias or levels of structure, or maybe even other indicators that you use, it just increases your edge in the market. And as traders, that's all we're looking to do. So what exactly is divergence? I'm going to give you the most stupid, simple, dumb version of it, because that's my style. I know a lot of people like being fancy. I'm going to just give it to you straight. Divergences are when your indicator or oscillator is doing something different than price action, right? So if we look at the chart here, there's two different sections. At the top of my chart, where there's like candlesticks and stuff like that, that is going to be price action, right? That is the market noting what price has done. It's visualizing it with candles and wicks and different colors and all that fun stuff. The bottom is going to be my indicator. Now, you can use different indicators. This is the RSI, the Relative Strength Index. That is my personal indicator of choice. It doesn't mean it's the best one out there. It's just one that works really, really well with my trading. But this can easily be a stochastics. This can easily be a MACD, just to name a few. And divergences are going to work the same on those indicators and oscillators as well. And what you're typically looking for with price action and your indicator is confluence, meaning that they're supporting each other. So you can see that when price action is moving up, right, our RSI is moving up. When it's moving down, there are periods when it's moving down, right? They should be doing the same thing. They should be in sync. However, because of how indicators work, and I won't get into a lot of detail about that because that's a whole long video in itself, I do recommend, before using an indicator, understand what your indicator is telling you. A big thing that I see a lot of new traders do is this, including myself, right? I am guilty of this, right? They see a video like this or another video and it's like, oh, cool, AKIL'S talking about the RSI. I'm just gonna throw it on my chart and use it, and you have no idea what it actually does. if you're going to use an indicator to support price, and in my opinion, I think indicators should be used to support price because indicators are based off of price. Makes it simple, right? You should know what your indicator is indicating. If you don't know what it's telling you, how can you really use it effectively and efficiently? While we're on the subject, I would also say this. I would highly encourage new traders, be creative with your indicator as well. Just don't use the default settings. Just don't use it in the traditional way that it's supposed to be used. Be creative. Trading is all about creativity and finding different little things that can help increase your edge, and divergence is one of them. For example, typically with the RSI, we always think of what? Overbought, oversold, right? When the market goes over this green line, and my lines are a little bit extreme compared to the default, but when the market goes over this green line, it's overbought. I should look to sell. When it goes under this red line, it is oversold. I should look to buy. That is like the default way of thinking about the RSI. But there are many other uses for it, and divergences are one of those really important clues that most traders overlook. So back to the subject, because I got to stay focused here, right? Indicator, price action should be doing the same thing. Price action goes up, indicator should go up. Price action goes down, indicator should be going down, right? Divergences occur when they are unaligned. Not in alignment, unaligned. That's a word. Yes. The streak is continued of me saying words that I'm not quite sure are words, but you get what I'm saying, right? If you understand it, that's all that matters. Divergences occur when price action is doing one thing and your indicator is doing another thing. I usually draw it on, but I'm just going to shortcut it and just like upload a chart for you to see. Look at this, divergence. Right? Do you see how price action is going one way, the indicator is going another way? Boom. Perfect example of divergences. Now, there are different types of divergences as well. Let's just talk about kind of the traditional one here. And what happens when the market shows that divergence is it's a clue that the market is losing momentum and we may see some type of reversal. Now, I'm going to dig in a little bit deeper about the word reversal because I don't want you thinking about it in a specific way. But again, very important to understand this is a clue. It's not just, don't just trade it every time it does it, but use it as a clue and add it to the other bits of your technical analysis to kind of build that case for entry. And I don't know when I'm going to do it, but eventually on this channel, probably sometime soon, hopefully, I'm going to upload a video talking about the CTS system, which is kind of we call it the combined technical score system. It's a way to quantify our analysis. That way we can kind of take different clues in a consistent fashion, add them together and find good trading opportunities. So that's going to be a really cool video for you guys. So an example of divergence here on your chart is this. We're going to, I'll just give you a quick example right here, right? Price action is going up here on the DAX. You can see price action is making higher highs. This high is lower than this high, right? What we typically see in an uptrend. However, if we go down to our indicator, I'm going to zoom it up and make it really, really big. You look at this same segment right here, and we have something different. We have a high right here, which is normal, right? This high is higher than that high. This high is higher than that high. The market should be doing that, right? But I'll draw a little line out here, right? See, this high is lower than this high, and this high is higher than, right? Or see, it works for the same, right? But we look at this second high right here, and we have something different. We have a higher high on our price chart, but we have a lower high on our indicator, right? So very similar to the chart I just showed you. This is an example of divergence. And again, what we expect from this is a little bit of reversal, a little bit of relief, and you can kind of see this pullback here in the market. So let's look at this in perspective of our actual trading opportunity before I bore you guys to death that are just here to look for the ideas. You should be here to learn. That's the most important thing. These ideas mean nothing if you don't actually absorb the information and learn from it and use it to make yourself a better trader. But some of you guys have very short attention spans. You're like, Akil, just get to the point. Just show me the opportunity, right? So another example of divergence is here. Again, just a quick one, right? You can see price action kind of losing steam. This is a loss of momentum pattern right here at the highs. And then this is very slight. You got to actually dig into the numbers to see it. But trust me on this. This second high is actually lower, very slightly, but lower than this high right here. So a small chance of divergence. And again, we can see a little bit of relief coming off of that. And that's what we're looking for, relief. Now, one of the questions that I got in the live room to end the week is, since divergence is a clue of reversal, and again, I want to do this thing, whatever that means, around those bunny ears, right? Around the, stop, focus, around those words. Should we only be using it in counter trend trading opportunities? And the counter trend trading opportunities, for example, is meaning in the opposite direction of the trend. So this is a bullish trend. A counter trend trading opportunity would be looking for like a bearish move, like a short from here to here. And the answer is yes, you can certainly use it for that. Again, combined with other clues. This would not be one I'd be interested in. But you can also use divergences in trend continuation opportunities as well. And when we go back to that word reversal, reversal doesn't just mean against the trend. Think of reversal as being when market goes from one direction to the other. So one direction to the other could be the end of a trend and it goes down. One direction to the other also could be a pullback before going up. So we'll dig into that a little bit later. Bigger trading reason here as I try to organize my thoughts. I'm not sure if I'm doing a good job of it, but hopefully you guys are still with me here. Because price action has recently put in a higher high, higher close, because if we go to the daily chart and zoom out, we are obviously in a bullish trend as we're moving from bottom left to top right. As a trend continuation trader, what you should be looking for here is a pullback, meaning that price has extended up. We have a little bit of exhaustion. We're putting in a pullback, which is a sign of relief, right? Profit taking, new bears, whatever you want to call it. We should be looking for the point in time where this pullback is going to end and we're going to see the next directional move up. And there's a few levels that we can look for here. This one's a little bit goofy because of the gaps, right? I told you about this last week with the gaps in the market, but there's a few levels we can look for. Now, traditionally, we want to start our zone by finding, we call this the kill zone, or some may call it the AKIL'S zone. Get it? My name's AKIL. AKIL'S, yeah, whatever. Okay. Anyway, we take that AKIL'S zone from the previous new structure high up here to the outside return, meaning that this is the first place in which, wrong tool. This is the first place in which we would expect price to come to before potentially rising up. This is the final place, meaning if it violates this level, the trend is over. We should no longer look to get long. Now, this is a very big zone, so it doesn't do us much favors. And this is where we can use other clues, right? We can do AB equals CDs. You can draw Fibonacci's. There's all types of technical clues that you can, or technical tools that you can use to kind of look into this zone. One of the things that I look for is going to be structure. And again, this makes it a little bit difficult to see because of the gap, but there are a few structure levels that I'll look for, and I'll go from kind of the bottom down. The biggest structure level or clue that I see is going to be obviously our previous level of structure, but these tweezer bottoms right here, right? You can see that these two long wicks to the downside, we call them tweezer bottoms. I know these may not be traditional tweezer bottoms. This is probably a better example up here, but two wicks that pushed to the downside and we saw rejection on the way up. This means that the bulls are interested or the buyers are interested in this level. This is certainly a place where if price were to come to this level, I would be looking for clues for longs. We have another example right here. Again, this is the beauty of reading a candlestick. There's another video here on YouTube somewhere teaching you how to read a candlestick. It's very important. No one wants to do it because it doesn't seem like it's a trading idea, but again, it increases your knowledge of reading the chart. And the better knowledge you have of reading the chart, the more dangerous you can be in the market. So please don't kind of jump over these baby steps, right? The advanced is nothing more than a mastery of the basics. Remember that. That's the greatest quote that I ever heard. I think I heard, maybe I made it up. I don't know. But the advanced is nothing more than a mastery of the basics. So you master the basic stuff and all of a sudden, the advanced starts to pop out. But you will never see the advanced if you don't master the basics, right? So this is another level right here. And what I'm going to do is I'm going to inch this level a little bit higher just because you can kind of see the shelf that occurred right here. So the main level that I would have on my radar is a retracement to this level and below. And of course, if I bring that Fibonacci retracement back on, you can see that we do have some confluence there. We have a 50% retracement right at the top. We have a 618 right at the bottom as well. Now, this is still a rather big zone here, right? Looking at this, and that's not too big of a deal because again, we're looking for specific clues once or if price comes into this zone. But if we can isolate it and have an idea of the best place that we want to look for, that's going to be very helpful. So something I'll do as well is I'll bring in my volume indicator. I'm just going to drag it from down here to up here, and we're going to look for areas with high volume. So think about it like this: these little sideways pillars. What are sideways? Columns are up, the pillars are up. Rows, these sideways rows. think about this as being the same as volume that's underneath your chart. The more they spike out, the higher the volume. The higher the volume, the more interest, right? So you can see there's not that big of a difference, but we do have kind of a big grouping right here around that same zone that we looked at. So giving me more confirmation, adding clues, right? That this is a level that I'm interested in. So back to the lesson, right? So how can divergence play a role? Well, divergence, right, may be something that we also get down here. So let's say that price does venture its way down to this level. We get a sharp move, and then maybe we start to kind of lose momentum again, right? We start to see kind of this type of rounding or this smaller candles, this loss of momentum pattern. I'm sure there's a better example here as well. You guys, if you've been with me long enough, you know what loss of momentum patterns are, right? If we see this type of move right here, right? Now, if we think about the RSI should continue to go down, right? Price is going down, this RSI should be going down as well. That would be a regular movement. But what if we get down here and we start doing this? Let's see if I can delete that. There we go. We start doing this, but we start seeing this with the RSI. What is that called? Pop quiz. Write it below. You have 5 seconds, right? It's called divergence, right? So divergence combined with a loss of momentum pattern, combined with a zone that we're interested in, combined with overall analysis that we're in a bullish trend and we're looking for a pullback, is a good sign that this pullback may be coming to an end, and that tells us to be alert in our opportunities to get long. So again, that's an example of using divergence as a technical reversal because we're going from one direction to the other, but in a trend continuation setup as well. And I hope that makes sense. Makes sense in the brain, but I know for the newer traders, this can get a little bit wacky. So if it doesn't make sense, just leave me a question or comment below and I'll be sure to address it. But this is the trading opportunity here on the DAX. It is a potential bullish trend continuation opportunity. We're waiting for a pullback. Obviously, we're waiting for our clues to tell us that, hey, this is the best possible spot to enter. Hopefully, we get the risk reward on our side as well, but a buying opportunity in here and a good lesson on divergence as well. You're welcome. Before you go, I don't do this enough. If you guys are interested in learning more actual lessons and actual working with coaches and mentors, head over to our website, www.tier1trading.com. I recommend starting with the risk-free trial membership. That way you can get a feel for what we have to offer, our trading style, our teaching style before you make any type of commitment. But take the trial membership, talk to the community, hop in some live sessions, take a few courses, and see if it's the right fit for you if you're serious about becoming a consistently profitable trader. All right, until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.